Hi folks, welcome back. Hope you are doing well. Today we have a lecture 16 of ICT A to Z beginner series. In this lecture, I'm going to show you the example of ICT 2022 module. In the previous lectures, I explained what is the ICT 2000 module and another stuff of ICT as well. If you are new to our channel, make sure you watch these all series that I already make a playlist on ICT A to Z beginner series. Okay, so you did not confuse on this video as well. So make sure you watch before you jump into this video. So let's get started. So in the last video I told you as well that if ICT 22 model work, will mark the midnight of New York, that is 12 a.m. okay, example it, okay, and then if we are bullish, you will see the power of 3. What is the power of 3? Power of 3 is where the price is open, okay, the natural phenomena and the natural reaction of the candle of every day. Okay, you will see a price open, okay, the midnight, and then you will see this is an accumulation phase, okay, where the opening price, and then price, if we are a bullish, you will see price will go opposite of your direction. That will be, you call a manipulation move, okay. Then you will see the price tap on some sort of POI, okay, and then price give you a that module. What module? This module, this one, okay. So what happened? Price open, accumulation, price go manipulation. Then in the kill zone hours, what is the kill zone hour? From 8:30, okay, from 8:30 price will shift their market structure, okay, to the bullish as per your bias, and then it will come back the 50% below of that move, and you will see a fair value gap, and then target the opposite side liquidity or your target, okay. So the thing is here that you will see this type 70%, okay, 70-80%. Most of the time maybe you don't see these type of things, okay, but if you go to the daily time frame, okay, so you will see that each candle representing a daily candle. So if you are a bearish, you will see price open from here, right, accumulate, manipulate, and then distribute and close, okay. How? Price open, okay, that day price was more bearish, price what did? Little manipulate, distribute in your kill zone hours, and close like this. This candle, understand, like this candle is made. So the part is, you most of the time you will see this type of scenario: open, manipulate, distribute, okay. But you see when the price action is messy, like here, you will see price open like this, okay, in consolidate, that the time when you will get your stop losses, okay. So make sure you stay with your bias, okay. And also in the coming lectures I will show you some ICT model where you don't need a bias, okay. Bias will be an extra thing for you when you are using that model, okay. So let's start it. We have a daily time frame. First I will remove drawing and let me show you, okay. Here was price go upside, take out the liquidity here, right, okay. If price are bullish, surely you know that price will take a pullback, okay. So where is the possibility of pullback? Where will price will stop? This order block, okay. Where it can stop? Top of the order block, consequent approachment of the order block, which is the midpoint of this black candle, okay, and the bottom of this candle, the last top. After that we have these a fair value gap which can be balanced, and we have also is a volume gap, okay, and we have then these order block as well, we have this break block as well. So we have, there is most POI downside as well that can be respected, but price tap here, and then we will shift it our time into the lower time frame to watch the scenario what will happen there. We will start from 1 hour, and you will see price tap here, from here market structure shift in 1 hour, and in the fair value gap you see also price give us a reaction on the upside. See, so all you see, this is the valid swing point, shift, we have this fair value gap, price tap in the kill zone hour. What kill zone hour? 3 a.m. What is that time? A London session, right? So London session, New York session, and New York PM session. Go opposite side liquidity. Understood? Okay, this is a 1 hour time frame. Let's jump into the another. So here also you see when price tap here, it was also market structure shift. This is a 8:30 candle as well, because we are on a 1 hour time frame. Price come back 11 o'clock on this fair value gap, and boom, this is a New York session, this is a London session, so this is a New York session. You will also see PM session also here was, you can target this high. Okay, so let's jump into the 15 minute and see what was scenario was there, and also we should mark out from here when the price tap on here. Okay, so we will go here 12 a.m. midnight. Okay, and we mark out that midnight opening candle. Okay, so what happened? We are bearish. Okay, but price did not make an manipulation move to the upside like this, right? So this happen, you have to write on your notes, folks. Okay, sometime when the price is bearish, you will not see that ICT power of 3. So the target is this area. So what happened? We have 8:30 a news driver time. Okay, after that we will take entry. We have this market structure shift. We have this what so called is fair value gap. Did price come here? Yes. Give you to your PY? Yeah, it's come. That's it. This is your target. Before you push a buy or sell button, you should know where price likelihood to go, where most likely price will go. That's the most important part of this lecture. This is the most important part of ICT. You have to find where is your target. Entry point is most easy point for ICT or any other price action, but the most important point where the price likelihood to go. Okay, now let's go to the next day. You have to practice, that's all. Midnight. Okay, I mark out. You see what happened? You see here, price did not make a power of 3, but when the price touch this area where the midnight open, you will see it shoot out. You have to write this on your notes as well, folks. Sometimes this happen. So here are the some scenario that I will mark for you. This is your midnight open, for example. Okay, and your 8:30. I will change the color so you didn't confuse, because this is example, not exactly time frame. So what happened? You mark out like this. This is your midnight open where the candle is open. Okay, if you are bullish, you will see price will go downside, right, and create a market structure shift with displacement, fair value gap, and like this, but in the kill zone hours. Okay, but sometime what happened, you really note this one. Price open, even you are bullish, price will go direct to bullish, just touch this line in kill zone hours like this and give you some sort of market structure shift, fair value gap, and go upside. This scenario will also happen. Okay, you have to mark. And sometime what happened, price did not come to that line. Then what you have to do, then you have to wait for 8:30 opening. Many time what happened, 8:30 when open, if you are bullish, you will see price 8:30 will go downside, took the liquidity, and then give you a market structure shift, fair value gap, and that. This thing also happen. Okay, so I hope you understand this point as well. So here is stretch and to the liquidity upside. Okay, so why he did not take this one? We have his fair value gap, we have this order block, and then at the PM session you will see at the PM session market take out the liquidity of this one. Tap again here, we have this market structure shift. We can try to shift our time to the 5 minute, 4 minute, 3 minute, 2 minute, and 1 minute to see what happened exactly here. In the London session, almost next day, the price came, we have fair value gap, price touch, and go. We have then our 9:45, we have fair value gap, kill zone hours. Let me mark out our 11, 12. Okay, we are bullish. So price what he did, like this, go in the kill zone hours, right? Market structure shift like this. We are in the POI, in higher time POI, upside. Okay, so did you miss the move? No, then you have to wait for 8:30. One thing you have to remember, that the market structure shift can happen before 8:30, but your entry should be between 8:30 to 11:30. Like here, we have a fair value gap, price came and give you the target. Where is the target? These relative equals highs, you see. But you will take partial like on these fair value gaps. Here, here as well, and the last one here. Okay. The more example will come and you will understand more. So make sure you stay with us and join our Telegram channel, subscribe our YouTube channel, and if you are new to Forex, make sure you join some good broker that I will put link on my description. And if you want to watch my video and the same series in Hindi, I already give my Hindi channel link in the description. Until next time, be safe.